Hey, good afternoon. Good evening, everyone. This is Marvin Smith back again with a topic tonight. Want to talk about the definition of an independent contractor. And the reason why I'm mentioning this is because many people, it's now tax season, and many clients come to my office. So let me say this. Once again, my name is Marvin Smith. I am the CEO and founder of Smith Bookkeeping Financial Services, LLC. And what I do is we prepare tax returns for individuals and business. We also do bookkeeping. We also do payroll. We also do business consultation, and we also do business entity formation. So, what's the business? What's the entity formation? If you want to form an LLC, if you want to form a partnership, if you want to form a corporation, and there's two types. The two main corporations are S corp and a C corp. Again, we do business entity formation, which we form the entity for you on your behalf, like for your business to have. Let's say, for example, ABC Enterprise LLC. So we will do all the administrative work. We will file everything. Along with that, you get what you call a EIN number, which is Employee Identification Number, which is a 9-digit number from the IRS. The next thing we can do for you, we can do what they call a registered agent. A registered agent is where the LLC or the company itself receive business documents. The other component is we can file the business owner's information report, which is required by the federal government. And if you don't file it, you'll get fined $500 a day. So we do that also. So these are many different type of services that we offer. But what I want to talk about tonight, tonight's topic is independent contractor, self-employed. So what is an independent contractor? An independent contractor is someone who is not employed by a company. Again, you don't work for the company as an employee. And here's the difference. As an employee, you fill out a W-4 withholdings. You also get what they call either you get an annual salary. And on that annual salary, either you're paid by the hour or salary. The other component is you get benefits such as health insurance, dental, vision, even life insurance. You get a retirement plan, a 401k, a 403. You get a Roth IRA. So these are different IRA retirement plans. And then some jobs offer what they call a HSA, which is a health savings account, or a flexible spending account, or a medical savings account. And here's the added bonus to being an employee when you work for a company. You get what they call PTO, which stands for paid time off. And what is this paid time off called? Vacation time, sick time, and holiday. And if you have a death in the family, it's called bereavement. If it's a father or mother, grandparents, uncles and aunts, and first cousins, and grandchildren. So that's called bereavement. And some jobs will also pay you for jury duty, where now you're summoned to serve as a juror on a case. It could be a malpractice case, it could be a murder case, but now you're serving your district as a juror on a case. So that's an employee. An independent contractor is someone who does not work for the company, but they provide services to the company. And they don't get an annual salary, they don't get paid by the hour, and they don't get an annual salary. But what it is, how they're compensated is there's a set amount that's agreed that's being paid out to this contractor. And this contract can be either a month-to-month contract, it can be a 3-month contract, It can be a 6 month contract. It could be a 1 year contract or a 2 year contract. It all depends on the company and how long do they need you to provide services to them. Now, what else don't the independent contractor gets that the employee gets? It doesn't get health. It doesn't get health benefit. It doesn't get health benefits for them, for you or your family. There's no dental insurance. Another thing is, as an employee, the company pays your taxes, submit your taxes on your behalf. That's why at the end of the year, every employee gets what they call a W 2. Whereas an independent contractor, you as the individual, the person, or the business is responsible for paying your taxes throughout the year. Notice how I didn't mention at the end of the year. No, you're responsible for paying you're responsible for paying the taxes yourself throughout the year. Every time you get paid, you will submit what they call estimated quality tax payments if you decide to stay as a contractor, which is a consultant, or a single member LLC. Right? You as the individual decide to stay as a consultant, sole proprietor, or a single member LLC. Right? So now you're responsible for paying taxes. And my advice to anyone that's being a contractor is understanding what the meaning of being a contractor versus being an employee. It's just the opposite. The employee is given everything by the company. The independent contractor is not given anything by the company except for the money that they agreed on to be paid for the services that is provided. So you're responsible for your own taxes throughout the year. The other thing is there's no pay time off. You get paid when you provide that service. There is no retirement plan. So now that's the between the independent contractor and an employee. So many people walk in my office and they will come in with a 1099 NEC, which stands for non-employee compensation. And as a contractor, you're giving gross pay. There's no deductions taken out of that at all. Again, as a contractor, you are giving gross pay. What does that mean? Let's say the contract is for, I'm going to speak hypothetically, I'll make it simple. The contract is for $12,000 for the year. You're being paid $1,000 each month. 1,000 times 12 is $12,000 for the year. And so you're going to be given $1,000 every month based on the time of the payment. So if you both agree that the payment is either broken up every 2 weeks, they're going to pay you $500. I'm only using 12,000 as something very simple. There's 12 months. The contract is for $12,000 for 1 year. So now the payments are submitted every 2 weeks, which is $500 every 2 weeks. And that's a total of $12,000 for the year. Okay? So now, as I mentioned, you are responsible to pay taxes, federal taxes, state taxes, and it also depends on where you live at. You might have to pay local tax or school tax, additional taxes. But now you're responsible for doing what? Paying tax, withholding taxes and paying taxes. You're responsible for withholding taxes and paying taxes. And my advisement is every time you get paid, you withhold the tax and you pay the tax. These are called estimated quarterly tax payments. Why? Because it does not require a withholding. Anything that does not require withholding, which is your job do what they call a withholding. So that's why they make you fill out a W-4 certificate, which is a withholding certificate to withhold taxes from your paycheck. And every 2 weeks, those taxes are submitted to the federal, IRS, federal deposit. Anyone that does payroll know what I'm talking about. IRS, federal deposit, EFTP, electronic funds, tax payments. EFTP stands for electronic funds, tax payments to the IRS. Then there's something called employer withholding tax. That's for the state. And if, for example, like here in Pennsylvania, if you work in the city of Philadelphia, work and live in Philadelphia, you pay what they call you get what they call a annual wage tax, and sometimes those results into a refund. Then, not only the annual wage tax, you have your federal, you have your state taxes. Now, if you work outside of Philadelphia and the surrounding counties, you would pay what they call a federal tax, a state tax, and a local tax. So you're gonna pay a federal tax, state tax, and a local tax. Let's say you live in Philadelphia, but you work outside of Philadelphia in the surrounding counties outside of Philadelphia. So you would pay a non-resident tax because you work outside of Philadelphia in the surrounding counties. That's considered a non-resident tax. And then there's taxes owed to Philadelphia, the city that you live in. Then there's a federal tax and a state tax. So every state is different. So as an independent contractor, you are responsible for withholding tax and payment of tax. Two things. You're going to withhold it and you're going to pay the taxes. Withhold the tax and pay the tax to what? The IRS and the state that you live in. And if you have to pay a local tax, you're going to pay federal, state, local. And sometimes within the state, you have the state taxes, you have local taxes, you might have school tax. It all depends on where you live at, right? So now, as an independent contractor, since you're self-employed, you cannot draw unemployment. Again, there was an exception during the pandemic, which was called Pandemic Unemployment Assistance, which was the acronym of PUA, Pandemic Unemployment Assistance. And during the COVID-19, the federal government created this temporary program to provide unemployment benefits to self-employed and gig workers. I will talk about gig in another time. This program has since ended in most cases. So the reason why a 1099 contractor cannot get unemployment because one, you're self-employed. And since you're self-employed, you don't pay unemployment because you're self-employed, you don't pay into the state unemployment insurance programs. So when you look at your paycheck, every time you work, you're not only paying into Social Security, but you're also paying into unemployment state programs. That's why when you get laid off from a job or let go, that's how you're able to collect unemployment because you're paying into it. And you can see it on your check. UI stands for unemployment insurance. They might say SU, state unemployment insurance. SUI stands for state unemployment insurance. And a lot of time when you get your W-2, if you look at box 14, it'll say SUI, state unemployment insurance. FL stands for family leave. So as an employee, you're paying into it, and your employer is paying into it. So you're paying into it. But as an independent contractor that's self-employed, you're not paying into unemployment programs, state programs. That's why you can't collect unemployment. Now, I know a lot of y'all say, okay, well, why become what are the advantages of being a contractor? Okay, here are some of the advantages. As an employee, unless depends on Let's say, for example, here in Pennsylvania, we have something called unreimbursable business expenses. What does that mean for an employee? I want to use an attorney as an example. Let's say the attorney goes to the court and file a motion to the court, or an adjournment, or order to show cause. Anyone that's out there, an attorney or legal assistant, understand these terms that I'm using. So an attorney from the office, they drive to the court. So now they're using their own car or their own vehicle. Now they have to park the vehicle, so they have to put their car into the garage. So that's parking. That's miles. Then they have to go inside and file a motion or a petition to the court, or they file an adjournment or order to show cause. They're going to the court to file on behalf of their client and behalf of the firm. So they have to drive there. And if they use their car, now, if the job does not reimburse them back for those expenses, you're able to claim those expenses on your tax return, because the state of Pennsylvania allows you what they call unreimbursable business employer expenses. And the reason why I mentioned attorney, because a lot of time attorneys fall under this category. Let's say you're a doctor, or you work as a salesperson. Now, a salesperson can get two things. Mainly, they can get a W-2, or they get what they call a statutory W-2. And if you're a sales rep, and where it says box 13, retirement and statutory, if that box is checked off statutory, and you're a sales rep, or you're a salesperson, now you get the report, you get the file, you get the attachment they call a Schedule C. You get to offset all those expenses. You get all those expenses to offset and reduce your income and reduce your taxable income. So I'll get a little ahead. So now I said, well, what are the advantages of a contractor? Okay, now, as a contractor, depending on what type of contractor you are. So let's say, for example, you're contracted out to be a nurse. All right. Now, you're given a case, right? So you have a case. Let's say you live in New York, but you're an independent contractor. Independent contractor who's working as a nurse for an agency. They don't want to hire you as an employee, but they want to contract the work out to you. So now you live in Brooklyn, but you have a case in Queens, and you have a car. So now you're able to take personal expenses and use them as business expenses. It's called ordinary necessary expenses. Again, it's called ordinary necessary expenses. These are ordinary expenses which are necessary for you to do your job. So now you have a case, you live in Brooklyn, but your case and the client is in Queens. So now you get in your car and you drive to Queens. And we're going to count the mileage. And let's say this is a 6 months contract. And you both agreed on how much you're going to be paid. So we're going to say this is a 6 months contract. You're paid $10,000 a month. And the value of the contract is $60,000. 6 months, from January to June. It ends June 30th. And then from that point on, they might renew the contract by extending it another 6 months based on the services that you provide and how well you work with the clients. So now you have a 6 months contract that's valued at $60,000 for 6 months. So you're being paid $10,000 for 6 months. 10 times 6 is $60,000 for 6 months from January to June 30th. That's when the contract ends. Now, I said that you can take your personal expenses and write them off as business expenses, but they're ordinary and necessary expenses. The ordinary expenses, which is necessary for you to do what? Make money. So now, as a contractor, you're given a gross payment every 2 weeks, right? Of $5,000, 5,000, and there's no taxes withheld. That's called gross payment. You're paid at $5,000 every 2 weeks, bi-weekly. Every 2 weeks, you're getting paid $5,000 gross payment. There are no deductions taken out of that. You're getting $5,000. Now, you're able to write off a lot of things. So now, let's say you have a house. I want to use a house. You own a house. Your house, the maximum square feet of your house is 2,500 square feet, but you have a dedicated office inside your house, not near the kitchen, not near the bathroom. And this dedicated space is not the living room. It's actually a dedicated space, which has a door, it has a desk in there, a computer, a printer. This is your office. You have files. You have cabinets where you keep files. Okay? You meet clients there. This is what they call a home office deduction. The maximum square feet of your house is 2,500 square feet. Well, what's the square feet of the office space? Let's say $300, 300 square feet. Now, you can claim that as a home office deduction. Now, part of home office deduction you can claim is partial mortgage. Let's say 25% of your mortgage. 25% of you need light and you need electricity. 25% of the mortgage, the real estate tax, utilities, right? Now, you have a computer, which costs $3,000. You can depreciate that computer equipment, any equipment. Let's say we have any equipment that's, let's say, if it costs like $3,000 or more, and you got equipment that costs that much, you can depreciate that equipment for over 5 years to recapture the cost on your tax return for 5 years. Right? Now, you can take the home office deduction. Now your office, which is in your home, now you're using that as to write off on your taxes. This is part of business expenses. Now you have to travel to your client. Remember, you live in Brooklyn, but you're traveling to Queens. Now, what you're going to do is you're going to use your car. So your car requires gas, right? So there's gas and there's mileage. Now remember, I say 6 months this contract. So for 6 months, let's say you finance the car. You would take 25% of the monthly cost for 6 months. 25% of the car insurance for 6 months. If you had an oil change, that's called repairs. Take 25% of that cost for 6 months. Because the car is ordinary and necessary expense. The car is an ordinary expense which is necessary for you to drive to get to your client. So you can write off you got the mileage, you have the gas. Let's say you have to pay tolls. Let's say you have to pay meter parking. I'll just speak. So these are our examples. There's parking, right? And I said repairs. Repairs can be an oil change, tires within that 6 months. And if you're paying a car payment, you're financing the car, you're gonna do what? If your monthly payments is $500 times 25% of that for 6 months. Remember, you get to take personal expenses, which you can't write off on as a W-2 employee because the government gave you what? The standard deduction. And they increased it. So 9 out of 10, if you're a W-2 employee, you're always going to take the standard deduction unless you itemize. Let's say, for example, property taxes or you had medical expenses and that exceeded your standard deduction. Now you'll take the itemized deduction because the itemized deduction outweigh the standard deduction, depending on your filing status. Home office deduction, you can write off 25% of the mortgage, 25% even the mortgage, even the interest only from your 1098, property tax, and utilities. You need light and electricity, right? You have a car, a vehicle. If you own it, you're not paying any monthly payments on it. So only you're paying on it is gas and insurance. You're always going to have repairs. But if you're financing the car, you're paying, even if you're leasing the car, 25%. Why? Because it's ordinary, necessary expense. It's an ordinary expense which is necessary for you to get back and forth to your client. Now, you have to have telecommunication. Let's say, for example, you had to fax in documents or faxing some documents to the agency that you work for. Maybe it's your timesheet. Or you wrote up a report on the case. You had to fax it in. So if you have a fax line and you're paying for it, that's called telecommunication. The internet, use the internet, right? You can write out the internet. That's part of it. Your cell phone. For 6 months, you get to take at least 25% of the bill. Why? Because the cell phone is ordinary, necessary. And if you buy your own lunch and the client or the agency is not providing lunch, that lunch is a meal that you can write off. So let's say for 6 months you ate like about $500 in meals. You only allow 50% of that. So half of that is $250 that you can write off. Then on top of that, you're paying, guess what? You're paying your withheld tax that you withheld, and now you're going to pay them quarterly. April 15th, June 15th, October 15th, and January 15th of the following year. So let's say April 15th of this year, June 15th, October 15th, and January 5th by January 15th of 2026. That's estimated quarterly tax payments. Right? So that's the other part. So let's say, for example, well, you say, well, what about, you say that what, I don't have health insurance, and I'm hoping that I have something lined up or this comes again. So let's say, for example, now I'm on the same scenario, but now it's going to be a 1-year contract for $120,000. That's the face value of the contract. So now what I would do is this. Maybe I would set myself up as an LLC, as an S corp, and as an S corp, I'm required to go on payroll. Now I have payroll. You can come through me, my company. We provide payroll or ADP or paychecks. Now you put yourself on payroll. Now you have federal, medical, Social Security, and guess what? Now you're paying into unemployment. So let's say the whole year, the contract is for $120,000. So now your taxes being withheld is going to be paid by my company, us, ADP, or Paychecks. So now it takes that stress off of you as a contractor. And you have to pick a reasonable salary based on the market, right? And you decide, right, reasonable salary. So now the only thing you don't have is health insurance. So what you can do is this. I would advise every business, if you can, or individual, because I would advise you to join the chambers, your local chambers of commerce. The reason why I say join your local chambers of commerce, there's another organization that I'm a part of, and I'll self-employment. But what it is that any self-employed individual, they have many different programs, like health insurance, um, legal advice. They go speak on behalf of small businesses. So if you join a local chamber of commerce, all the members of the chamber, you'll get discounts on health insurance, right? Now, the only downside to an S corp is when it comes to health insurance, the premiums are added back into the shareholder's salary. That's the only thing. The premiums are added back into your salary. Just like a partnership, it's called guaranteed payments. So the premiums of health insurance, which are guaranteed payments, are added back into the partner salary. Not a single member LLC or a C Corp, right? But as an S Corp, the premium is added back into the shareholder as 2% of that is salary. So that's the only thing. But once you have the S Corp and you're on payroll, you're fine because you're paying into unemployment. And let's say, for example, the following year you didn't have for like the first 3 months you didn't have nothing come in. Either you're looking for a job or you're waiting on another assignment. But for 3 months, they don't have nothing for you. Those 3 months, you can file for unemployment. Why? Because you set yourself as an S corp, and now you're able to put yourself on salary. So as an S and a C corp, you are required to go on salary. As a partnership in a single member LLC, there's no payroll. Okay? The way a single member LLC pays themselves is through what they call owner's draws. And the way a partnership pays itself is called guaranteed payments. So both are not required to go on payroll. That's a rule. But when you come, let's say you're an LLC, and now you choose to be taxed as an S or C corp, you're required to go on payroll. Partnership or a single member LLC. So now your contract is $120,000. I say put yourself on payroll, LLC, LLC, but tax yourself as an S corp. And then what'll happen is you put yourself on payroll, you're paying into Social Security, and you're also paying into unemployment state program. And let's say after that year ended, let's say for 3 months, you decide that you might want to go look for a job, or you're waiting on another assignment from the same agency. But they're going to be 3 months, right? So now, those 3 months, you can file for unemployment because you're an employee of your own company. And the reason why I wanted to make this video was many people walk in my office with a W-2 and a 1099. Either the individual, or let's say if they're married, let's say the husband works, but the wife, she drives Uber, or she drives Lyft, or she do Grubhub, right? So at the end of the year, Uber, Lyft, and Grubhub, they're gonna issue her a 1099 NEC, right? And then she's gonna be able to print out a statement of how many miles driven and how much she earned for the year. But the 1099 is gonna have the actual payout, what they paid her for that year, right? So now the husband is bringing in a W 2, but the wife has a 1099. But I said the wife, she doesn't know that what if she drove Uber for the whole year, she's able to write off what gas, the mileage, repairs. Let's say she's financing the car for that year. Take 25% of what the monthly payment is. Insurance, because these are ordinary necessary expenses. This is an ordinary expense, and her having a car is necessary for her to make money. A cell phone, that's an automatic given. Cell phone is an automatic given. You're definitely gonna write that off. Definitely can write that off. But here, as a driver, there's no home office deduction because she's a driver. Just like how many people heard of Toro? Well, you recently heard of Toro for what happened when they had the explosion, one in New Orleans, and I forgot the other place it was, where the guy blew up one of the guys that drove through New Orleans, that terror attack about 2 months ago. They said he got a car through Turo. So Turo is this. Let's say, for example, you have 3 cars, but you only drive one, but the other 2 cars sitting there. You could create a business out of that. Where now you sign up for Turo and you put your car online. How much are you going to rent it per day? Now, while it's in Turo's possession, Turo's going to cover your car as far as insurance and stuff. However, instead of your cars being a liability to you, you turn your cars into an asset. What is the asset? Those cars are bringing in cash versus you paying out cash on these cars to maintain them. The cars now are bringing you in money. So that's what Turo does. So I was speaking on many series, and many of my clients walk in my office is you're gonna have clients that where a company's gonna either hire them as a contractor or hire them as an employee. And it's very important that you know the difference between two and how that you can write off personal expenses as business expenses when you're a 1099 contractor. And once you understand how it works, now you're able to execute it properly. Many of my clients don't know how it works. So what happens is, remember, you're getting tax-free income. You have to pay taxes on this. So let's say, for example, you had a job and you made $70,000 from your job, but you made $30,000 from being a contractor or a consultant, which is the same thing, consultant contractor. And you made $30,000 gross, but you didn't. For some reason, you said, "Well, I'm going to do my own taxes," and you go on TurboTax, and guess what? Let's say you single, no dependents, right? You made $70,000 from your job and $30,000 as a consultant contractor. Your job withheld taxes, but you didn't know that you could do the same thing as a contractor. So you get the $30,000, and then you go on TurboTax, not knowing that you can do what? There are certain expenses that you can write off, mainly a cell phone. And if you, as a consultant, have to drive to these places, there's mileage, there's gas, there's tolls, there's parking that you can write off. But you don't know that. Come to find out now, $30,000 on top of what you made the job, you made $100,000 for the year. You made $100,000 for the year. Only the 70 what you was at your job is the only place that they withheld the taxes and they paid the taxes. But when you did the contractor work, consultant contractor, you didn't pay no taxes. So now two things is gonna happen. You're gonna owe taxes, and there's something called underpayment penalties. What does that mean? Underpayment means that what? You didn't pay enough. You underpaid when it came to paying taxes. So now you're going to be penalized and you have to pay interest on that. So that's why it's important. Once you start making money, and even if you don't make money, there's nothing wrong with sitting down with myself, which is a tax accountant or CPA or an enroll agent, and have us get the education. That's a problem with today's world. People are not educating themselves. People are told how to think. So when someone is telling you how to think, you're not thinking for yourself. So you are repeating what you heard, not knowing if it's true or not. But you're going to repeat those things, what you hear, not knowing if it's true or not because you didn't do any research. So the masses of the people are operating off their emotions. That's what the Lord said in Hosea 4:6, my people were destroyed for the lack of knowledge. Because what? They reject the information. So now many people are walking around, and many of my clients, and I tell my clients, when I prepare your return, I'm not just preparing it on an annual basis. You come in and give me your documents. No. If you have questions throughout the year, you can call me and ask me questions. And I will be glad to help you and answer those questions. But a lot of people don't do that because they don't realize that when you lack the knowledge, then there's no one you can blame but yourself. A lot of people walk around this notion. I have one client say, one of my clients said, rich people don't pay no taxes. I said, that's not true. She go, what you mean? I said this, let's say Jeff Bezos. He owns Amazon, right? Now, don't Jeff Bezos have employees? So now, what happens every 2 weeks? What happens every time he pays employees? Not only he has to withhold taxes for the company, but he has to withhold taxes from the employees, right? And then he has to make payments, electronic funds, tax payments to who? The IRS. And the state that you do business in requires you to have what? An employee withholding number. So you have to pay state taxes, right? Then local taxes and city taxes. These are called payroll taxes made to the federal and the state. What are they called? Payroll taxes. Federal, state, and local. Then every 3 months, Jeff Bezos company has to file a payroll tax return. Then at the end of the year, throughout the year, they're paying payroll taxes and what? Sales tax. Sales taxes every 3 months, right? Where do sales tax go to? The state. That's how your state collect revenue. One of the ways your state collect revenue is off of state tax, occupancy tax. Those that have a hotel, they pay occupancy tax and sales tax. There's sales tax on tobacco. So the way the state get one of the ways the state get revenue is through sales tax and payroll tax. So now he's paying the what? Sales tax, right? So what do you mean the rich don't pay no taxes? If they have a company, they have employees, right? Now they have to file a company tax return. They might end up owing. But they have tax professionals who know the law, the IRS law, and the tax codes. That's the difference between someone who's educated and informed to someone who's uneducated and not informed. And that's why it's very important to know. I remember my sister, she sent me a video from Instagram. His name was going on about taxes. And I sent her back and said, that doesn't apply to me. Because I pay very little taxes. Why? What does that mean? Because legally, I know what expenses that I can write off. Because I'm a business owner. And I get to write off all my expenses. All my expenses is to offset my income. It reduces it. Let's say if I made $100,000, but I had what? $90,000 in expenses. You take 90,000 minus 100,000. I'm only paying taxes on 10,000. Then on top of that, I get what they call a QBI, qualified business deduction, which is 20% of the net profit. It has the S corp. I'm not paying self-employment tax, which is subject to a single member LLC, partnership, or sole proprietor. So I pay taxes, but the bottom line is this: it comes down to education. Many of us, as I always taught, that many of us lived in a household where our parents didn't teach us anything about credit, taxes, finances, or even how to save money. Many of us grew up in a household where there was no money, and there was very little money, very little resources, very little education, right? Those that grew up in the hood know what I'm talking about. Even people that are poor in the Midwest could be white or black. Because poverty, each one of us have a story about poverty that we can connect with. As I mentioned, my mother was on welfare. So she didn't finish school. So now that way it goes back to a lack of education, right? But I was determined to motivate myself. I was determined to. I don't like to use the word curse, like a generation curse. I was never cursed. I don't like to use those words. I was never cursed. I inherited who my father and mother was. However, as I became a man and became an adult, now I'm able to make my own choices outside of them because my father and mother is not here no more. They're both deceased. But when they was alive, I had to create my own path. In spite of me being from them, right? Inherited what they knew. You understand? But that's no excuse to why you don't have. So when I hear people speak like this, it's coming from a place of what? Being misinformed, from a place of emotions, a place of fear, and they're repeating something that they did no investigation on to see is it the truth or a lie. Like Malcolm X said, a man that stands for nothing fall for anything. I say a man that had nothing to stand on will fall for anything. A man or woman that has nothing to stand on will fall for any and everything. Because they can be tricked. Majority of most Americans do not think for themselves. They are being told how to think. They're being told how to think and react and respond. You rarely find most people in this country who think for themselves. Think, let's say, outside the box, inside the box, outside the box. And they're not influenced by what they see on the news. The majority of the news is nothing but lies. And a lot of people that's born in this country, they're taught to hate this country. They hate themselves. Everybody don't feel that way. Everybody sees this as the land of milk and honey. Life is what you make of it. So, as I mentioned, I wanted to make this is one of many videos that I'll be talking not only throughout the tax season, throughout the year. And like I said, I made other videos on health and stuff like that. So I will be talking about other things and other topics. And I would like to start at some point as I get familiar with this, react on videos off of YouTube. Because there's no excuse why you don't have nowadays. There are so many people who've made business from social media, like TikTok, YouTube, Rumble, and many other platforms, social media platforms. And what's amazing, a lot of these people have no background in editing or journalism, but they was able to articulate, educate themselves, and create their own business from what? YouTube, Rumble, TikTok, Twitch, Instagram, many other social media outlets. People have been able to create income and make a name for themselves and create a business for themselves. What other country gives you this opportunity? Name one. That's why so many people want to come to this country. Why? They see opportunity. Many of my people over here complaining and crying. Black people crying. Nobody respects a beggar or crier. You can be and do and have, but you have to put your mind to it. A lot of you want people to give you things. You don't want to work for it. A lot of you want the path to least resistance. But as I mentioned, I was glad that I made this video tonight. And this was a very important topic because so many people don't understand or have the education or the know-how to make being an independent contractor work for themselves because they lack the education, lack the knowledge. So I'm here to give you the education and knowledge that it can benefit you. And in so many ways. But as I mentioned, I wanted to keep it very simple that who's ever listening, they can understand what I'm saying. And please check out my videos on YouTube. Again, my name is Marvin Smith. I am the CEO and founder of Smith Bookkeeping Financial Services. If you're looking for tax preparation, please reach out to me. I'll be glad to take you on as a client, but there's a consultation. And as I mentioned, reach out to me. You can reach me at 215-745-2713 or email me at info@S as in Sam, B as in boy, F as in Frank, S as in Sam, LLC. So that's be info@SBFS LLC.com. Good night to everyone, and God bless you.